So let's go ahead and get started. I'm going to start us off this morning with our prayer, our collect for the fourth Sunday of Easter. Let us pray. O God, whose Son Jesus is the good shepherd of your people, grant that when we hear his voice, we may know him who calls us each by name and follow where he leads, who with you and the Holy Spirit lives and reigns, one God, forever and ever. Amen.
Amen.
Well, again, good morning, everybody. It's great to see you. Great to have you here. As I had mentioned, I am going to go ahead and reprise the presentation that I did on the employee retention tax credit, which due to numerous changes in that law since it was first instituted with the CARES Act last year, has gone through a number of changes that have made it much more beneficial for us than it appeared that it would be when it was first enacted. So let me go ahead and share my screen and see if we can't get to here. All righty. So just a quick recap of the governing law around the, I'm just going with the ERC. It started with the Coronavirus Aid, Relief, and Economic Security Act, the CARES Act, which was enacted in March, over a year ago now, as hard as that seems to believe. It first established the ERC with some significant limitations on it that really made it not that advantageous for most of us when it first came out. But then there was a substantial revision that was done to it through the Relief Act at the end of last year. It greatly expanded the availability of the benefits of the credit and extended it all the way through June 30th of this year. And then with the ARP Act, which was just enacted in March, it was extended through December 31st of this year. So while we're still somewhat waiting to see if the ARP Act extends all of the provisions of the Relief Act through the end of the year, we're fairly certain at this point that it will. So we're, moving forward as though it will. And so most of what we're talking about here, I would anticipate will be available all the way through the end of this year. So why now for the ERC? So if it has turned into, I guess I should say, one of the most beneficial provisions of the Relief Act that's relevant to nonprofit organizations. When the ERC first came into existence in March of last year, you were not eligible to consider it if you took a PPP loan/grant. And for most of us, the way that the ERC was initially structured, the PPP was much more advantageous for us. So if it was either or, which it was, most of us took the PPP and we pretty much kind of pushed the ERC to the side. But now the main beneficial provision of the Relief Act took away that limitation of either or for the PPP or the ERC. So now you can do both. You are eligible to do both. Not only that, they made it retroactive to 2020, or at least to the last 3 quarters of 2020. So there is a substantial benefit available to us, not only in the current year, but also retroactively to last year. And it's definitely worthy of consideration and going through the calculations to figure out if it can be benefit to you. And you'll see as I'm going through some of the slides here that I've noted my sources down at the bottom, some of the websites that I have researched and found to be some of the more clearly stated explanations of some of these changes. And this slide presentation actually already is available in the financial information section of the COVID-19 part of the website. So you'll be able to, if you'd like to, access the slide deck and go back to the source material if you want to get a better and more of an in-depth look at it yourself. And so, in addition, as I mentioned, to the retroactive benefit in 2020, in 2021, there is also an enhanced amount available of the credit for wages that paid during all 4 quarters of 2021. So we'll take a look at what that, what those changes and those limitations are as well. As always, whenever they come out with these regulations, one of the first things we have to always ask ourselves, are churches eligible? Nonprofits are one thing, but are churches, religious organizations eligible? And again, it's very clearly stated, tax exempt organizations are eligible for the ERC because they're deemed to be engaged in a trade or business regarding the entirety of their operations. And examples of nonprofit organizations that have already taken advantage of the credit are hospitals, schools, museums, performing arts centers, and churches. And again, this comes from the same source I was quoting from before. And so the answer to the question is yes, churches are eligible. You will hear a lot of language as we go through this, or if you do research on your own, where they continually use the language of trade or business, which can be off-putting for us because we're not considering ourselves to be in a trade or business, but just, in your mind, just make the mental substitution for our church operations, and we are eligible for that. So what is the ERC? The ERC, Employee Retention Credit, is a refundable payroll tax credit for wages paid and health coverage provided. Okay, so that's a biggie for us as well. By an employer whose operations were either fully or partially suspended due to a COVID-19 related governmental order, or that experience a significant reduction in gross receipts. So there's a lot here, and that's part of the reason I highlighted it the way that I did. I'll take it bit by bit. The first part of it says it's refundable. Okay, so that means that, and maybe I'll take the first part of it as a whole, refundable payroll tax credit. A payroll tax credit is typically something that we know of as being applicable against the payroll taxes that we have to pay in, either with our 941 forms or, our federal tax deposits that we pay in advance of our 941 forms. And so what it means when it uses the term refundable means that not only can we use the credit to offset whatever taxes we paid in by that method, but we can also get a refund of any amount of the credit that exceeds the payroll that we've already paid in. I saw Kathy's note there about, can we all be muted? If anybody isn't muted, that would be a good idea. You may be hearing my puppy crying in the background, and there's just not a lot I can do about that right now. So that might actually be me. I think maybe I'll shut my door. Maybe she can't hear me then. So then back to where I was. Again, the refundable portion of this means that we can get a refund over and above any taxes that we've paid using this tax credit. And again, the credit is computed based on wages paid and health coverage provided. And we'll go through a little bit more about the mechanics of the calculation in a second. Now, these two conditions that follow are important, and the distinction between them is important. So it can apply to you if you had your operations either fully or partially suspended due to a COVID-19 related governmental order, or if for some reason you don't qualify for that, You can also qualify if you can demonstrate a significant reduction in gross receipts. And I'm going to go a little bit more into depth into each one of those criteria. So, as I mentioned, one or the other of the following criteria. We just, went through that. I'm going to go through the first criteria first, the one that has to do with being fully or partially suspended, because that's a gray area. And this is the area that all of us are going to have to, just kind of do your own analysis to see if you feel comfortable that it does apply to you. And so you can be considered to be affected by a governmental order, even if you continued operations, depending upon whether the operations that you had to suspend. I don't think there's any question, let me start, in any of our cases that we were affected by a governmental order. Okay, there was an order that came, and the order is still in effect to a certain extent, although it's continually being opened up. Or loosened, I guess I should say, but we have experienced, all of us, significant curtailment of our normal operations through a government order that we are not allowed to gather in person, or if we do, we have significant distancing requirements. So I guess the question really comes in as to at what level are we able to perhaps continue to qualify for this particular credit? And so in the source that I have here from Eisner-Amper, it talks about whether the suspended activities make up what they call more than a nominal portion of the business. And this comes from FAQs out of Notice 2021-20 from the IRS. And in those FAQs, the IRS references nominal to mean less than either 10% of the total gross receipts of the business operations. Again, we can say church operations, or the total hours of service performed by all employees. So if you have experienced a curtailment or a suspension of activities that are any greater, to an extent that's greater than 10% of your total gross receipts or the total hours of service performed by all your employees, then that would be criteria that would say that you can claim the ERC. To the extent that you're looking at the impact that this has had on your building usage, and that could be building usage having to do with all of the groups that use your buildings. If you're sexton or whoever is providing the opportunity for you to host recovery groups or things like that, if we've had a curtailment in that activity, or if you have, as many of us have had, impacts of more than 10% on gross receipts from things like fundraising or building rentals, things like that, then that can be used as a criteria to claim this credit. And so there are a couple of examples, again, in this source material, which you can feel free to look at yourself. At the end in my sources, I also list links to the IRS notices that had the FAQs in them with a lot of examples. But here are just a couple. Here's one where it says an employer such as a food processing plant is required to devote several hours a day to cleaning due to enforced health regulations. That qualifies as a partial suspension. Okay, so just the fact that they have to close down to clean in a way that they didn't have to clean before, that is considered to be a partial suspension that would qualify them to claim the ERC. An employer that is allowed to continue to operate during a governmental order, but has to suspend a more than nominal segment of its business is considered partially suspended. For example, a hospital facility that does remain open but cannot perform elective surgeries is a partial suspension. So, again, you don't have to be completely shut down by any stretch of the imagination to qualify for this credit. There are other examples that you can see there that you can read through, and see if you are, feel comfortable that you could meet this criteria. This criteria is actually, probably easier for most of us to meet than the revenue reduction criteria. We'll go into that in just a second. And so, as I noted, they noticed 2021-20 from the IRS provides many examples when a business is or is not considered fully or partially suspended. Each one of our situations is going to be unique. This can't be, this isn't a one size fits all. So each one of us is going to have to take a look at the degree to which our operations and ministries were impacted, to make our own decision about whether we were probably not fully suspended. Most of us were not, because we were, continuing worship in at least some form. But there is a very good chance that there are a significant number of us who would qualify under the criteria for partially suspended. So the second criteria is the organization experienced a significant decline in gross receipts during, and again, we're comparing calendar quarters from 2019. And for these purposes, for 2020, gross receipts for the 2020 quarter, when you would begin to qualify, would be in whatever quarter your gross receipts declined more than 50% when compared to the same 2019 quarter. Okay, and remembering also in 2020, because of the date of enactment, the first quarter is essentially, the first quarter of 2020 is essentially not available, because they say that the date that they actually give is March 12th, that you can go back to retroactively. So it would mean the last, 2 weeks of that quarter that you would be looking at, if you decided to do that. But basically, for the second, third, and fourth quarters of 2020, it would be in whichever quarter your gross receipts for that 2020 quarter declined more than 50% when compared to the same 2019 quarter. And your eligibility would continue through whatever 2020 quarter, until your gross receipts were greater than 80% of the gross receipts in the same 2019 quarter. So they're envisioning you becoming eligible when you have a real drop off, in your receipts, that 50% comparison. And then, also allowing that you can continue to be eligible even as your receipts come up, to the point where they're basically less, they're up to within 20% of the quarter compared to 2019. So, I think for this, especially for the 2020 criteria, under the credit, that's going to be a much more difficult qualifier than the partial suspension for most of us. So that's the gross revenue decline one. And now moving into 2021, again, looking at the, qualifying under the criteria of gross receipts decline, that eligibility threshold, again, comparing calendar quarters to 2019, okay, we're comparing 2021 to 2019. It's now that that decline in gross receipts is only 20%, that requirement, not 50%. So 2021, that's a little easier to, to hit, although 2021, we may have already experienced somewhat of a resurgence in gross receipts. And so, and then they have the safe harbor allowing employers to use the prior quarter gross receipts compared to the same quarter in 2019 to determine eligibility. So there's, again, it's just a little bit of a choice of quarters there. If you happen to have your revenue come up, in a later quarter, you can still use a prior quarter gross receipts to compare to the same quarter in 2019 to determine eligibility. So, again, just kind of to wrap our arms around all of that, there are two criteria. Okay. The first criteria, which I think is going to be most applicable to most of us, is going to be the partial suspension criteria. I don't think there's any question that we were not fully suspending activities, but partial suspension, I think, it applies to what I understand of the operations and the impact on operations of a lot of our congregations. And then the second criteria is the decline in gross receipts from whichever quarter in either 2020 or 21 compared against the same quarter in 2019. And so before I move on from there, are there any questions?
Phyllis, I have a question.
Sure.
Mary Duke from St. Peter's. So we only need to meet one of these criteria?
Correct.
Okay.
Correct. It's, just one of them.
Great. Thank you.
All righty then. I will move on. Oh, sure. Go ahead.
Do pledges or plate count as gross receipts?
Yes, they do. Yep. Yeah, they do. Yeah. And so that's why I say, I think for a lot of us, it's going to be easier to, to meet that partial suspension criteria than, for gross receipts, you're essentially using the same gross receipts as you were using for the PPP. So it's your building rentals, your fundraising, your any kind of dividends or interest that you received in addition to your pledge and plate, all of that stuff that makes up your normal, operating budget. So, any other questions on that before I move on? All righty.
Question, if I might.
Sure.
Does the suspension of home visits for pastoral care count?
Yes.
Okay.
Yes, it
Thank
does.
you.
I think when you're looking at any kind of operations that you had to curtail because of our social distancing requirements due to governmental order, and I would say, yeah, absolutely, that's one. So moving on to claiming the ERC. So the ERC can be claimed quarterly to help with the cost. It's, again, as the name suggests, employee retention tax credit. It's supposed to be to help us with the cost of retaining our employees. And you can choose to use, once you calculate your ERC, you can choose to use it actually even to offset your federal payroll tax deposits. So for those of you who make payroll tax deposits prior to your, prior to filing your 941, some of us don't rise to the level of having to do that. But for those of you who do, you can actually use the credit to offset your payroll tax deposits, which include, employee FICA and income tax withholding components of what you have to pay in. So here again, for those of you who are in a situation where you, perhaps your clergy who don't have FICA withheld, but may have chosen to have income tax withheld, you can use this credit to offset that withholding that you pay in for whoever's having the tax withheld. Yeah, John, you have a question?
Yes, good morning. In the past, we used to pay our rector her FICA SICA in a quarterly check, but a year ago we started adding it to her salary in the ADP payroll process, and grossing it up and then withholding the full amount. Would that be eligible for recovery under or coverage under ERC?
Yes, because if you're doing it correctly, when you're withholding it, you're having it taken out as federal tax withholding, correct?
Yes.
Yeah, so yes, absolutely it would. That's income tax withholding. So this credit can offset that, yes.
Okay, so let me ask an alternative form of that question. If we were doing what we had previously done, which was directly paying the rector the quarterly FICA SICA, that would not be covered by ERC, correct?
That's correct, because it's not the payment of the SICA that the credit is applicable to. It's the withholding of the income tax, right? So the
Yes.
payment, the payment of the SICA, if you were handling that completely outside of payroll, so that there was no, what you're basically doing is including it and then having it taken out as federal tax withholding.
Yes.
And it's the federal tax withholding that you can offset with the ERC. Does that make sense? So if you were not withholding, even
Okay.
if you had decided that you were going to, rather than just pay the SICA on a quarterly basis, if you were just for your own ease of management, if you had decided, no, I'm just going to run this through ADP and have it paid out every pay period, but you didn't have that income tax withholding, if they had chosen just to receive the money but still make their regular quarterly estimated tax payments on their own,
Right.
you would not be doing any withholding and you would have nothing to claim the credit against. You see what I'm saying?
Yeah. So we have a plausible case, should anyone ever investigate this, to say, hey, we followed the strictly followed the technical definitions. In other words,
Oh, absolutely.
we're withholding money from her paycheck, and
Yep.
ADP on our behalf is remitting it directly to the IRS.
Correct.
Even though we're not withholding tax associated with earned income, so to speak.
Right. Well, I mean, again, the only thing that you're not withholding is FICA. You don't withhold FICA on your clergy. You're paying SICA. So I always like to try, it seems to make it clearer to me to try to break it down to like lines on the W-2 form,
Right.
So you have your box 1 wages, which is your earned income. And then you have the federal income tax withholding that appears next to it. And that's where the amounts that are being withheld from your clergy's paycheck to help cover the SICA obligation, that's where that's going to show up. It's going to show up as federal tax withholding. Okay. And then when you go down, so that's box 2. Box 3, just underneath, is Social Security wages. And then box 5 is Medicare wages. And there is nothing in either one of those boxes for a clergy person, nor is there anything withheld from their wages for Social Security or Medicare. It's withheld as federal income tax withholding. And that's where, yes, you do need to make sure that ADP is getting that right. But on a clergy W-2, there should never be any numbers entered for boxes 3, 4, 5, or 6. Medicare wages or Social Security wages, Social Security withholding, Medicare wages or Medicare withholding. There should never be anything in there.
But for the 2 part-time employees we have who are subject to deductions for Medicare and Social Security, we can recover those through ERC, correct?
You can recover those through ERC, and you can recover their income tax withholding.
Right. Yeah, exactly.
Yep. So for your clergy person, you can recover their income tax withholding. For your other part-time employees, you can recover their Social Security, Medicare, and income tax withholding. Does that make sense?
Yep.
Okie doke. And John, I see you have your hand up. Go ahead.
I thought I had this under control, but now I'm completely confused.
Oh, God, sorry about that.
Okay, let's look at 2020 for a minute, because I'm not going to use any of the credit to pay my income or withholding or anything like that. wages would include the salary, the housing, and the SECA, correct?
That's correct.
All right, plus normal wages to my individuals. So when I calculate all of that, I come up with 50% of that comes up to something like $17,000
Right.
for the credit. That's just, I just check the box that says send me the cash, right?
Well, basically, so you're talking about 2020 now, right?
Yeah, for 2020.
So you would have to go back and amend your 941 form.
File amended 941s.
Right.
Yeah.
Yep.
But I'm not going to use it because they're all paid already.
Right.
All of
Exactly.
the taxes are paid. So, I mean, that's basically found money that's going to come back to us.
Yes, that's correct.
Okay. And then in Q1 2021, I think we've already filed the 941, so we're probably going to have to amend that one as well. But wages includes salary, SECA, and housing, correct?
That's correct.
Okay.
For a clergy person.
All right. So you're just talking about what you might do with the funds that are generated by the ERC, but that number is going to be substantially larger than taxes owed.
In many cases, yes.
I mean, in almost every case that I can think of. Okay.
Yeah, definitely. I mean, you're limited to, and we'll see as we go through, the actual calculations, that there's a limitation on how much of wages, applies,
and so it jumped way up.
Yeah, just, to kind of jump my agenda a little bit for 2020, that you're limited to the first $10,000 per employee of wages and health coverage. Okay. Now, as you mentioned quite accurately, in 2021, that jumps up to $10,000 per employee per quarter, which makes a huge difference.
And the credit jumps to 70% instead of 50.
Exactly. Yep. The credit jumps from 50% for 2020 to 70% for 2021. So yes.
Sorry to get ahead of you.
No worries. John, yes, you had your hand up again.
Yes. Setting aside the timing issues that John just mentioned, the basic objective of ERC is that the federal government will pay. I mean, we are then relieved from making payments on our employees' accounts for income tax withholding, et cetera, et cetera. That doesn't mean that their accounts receive no payments. It simply means that the federal government is paying that money on our behalf, correct?
That's correct. Yeah, they still get credit for it in their, against their withholding in their Social Security accounts.
So,
yes.
so from our employees' perspective, they are indifferent as to whether we pursue this ERC claim or not.
Absolutely, no
words,
impact on them.
It's invisible to them.
Exactly. Yes.
Okay. And hence, we don't have to ask their permission.
Correct.
Excellent. Thank you.
No problem. Kirk.
Morning.
Good morning.
I'm just wondering, as a planning strategy, if you have a clergy person who is chosen to pay their own income taxes through estimated taxes as opposed to withholding, would you not want to maybe recommend to them to switch to a withholding from pay method so that you could actually speed up the recovery of this ERC?
I would say yes. Yeah. I mean, if you wanted to, for 2021, obviously, you're stuck with what you've got in 2020. That can't be changed. But yeah, moving forward in 2021, they would be doing, they would be actually doing the congregation of service, and by making more funds available through this credit to help with those costs.
And then to John's question, where he talked about the timing of the recovery, if I was to say that I'm eligible for a credit of $8,000 and I pay on average $2,000 a month in Social Security, Medicare, and federal income tax withholdings through our deposits, I would claim those going forward, not backward, and recover as each payment comes due by not paying it. So I would recover it over the ensuing 4 months. Am I reading that correctly?
Well, if you're talking about the 2021 situation, yes, you could do that. But if you're talking about 2020, okay, and one other thing that I'll be going into in just a second here is the coordination with the amounts that you've already used for forgiveness for your PPP grants. But for 2020, you would be going back retroactively and amending 941 forms to be able to get refunds where you're due them from the 2020. But moving forward, as you mentioned, you can do it completely on a proactive or forward-looking basis with the federal tax deposits that you will have coming up for your people. Again, in both years, this needs to be very carefully coordinated with what you plan to use if you've applied for a second round PPP grant or loan to turn into a grant. You have to be very aware of because the one rule that is within the ERC and the PPP remained in the coordination provisions is that you cannot use the same wages for both. You can claim both. One is not mutually exclusive of the other, but you cannot use the same wages for ERC purposes that you used to claim forgiveness for your PPP loan. So that's where the coordination needs to come in. And then you need to be planning your strategy around whether you're applying the ERC towards upcoming payroll tax deposits or applying it retroactively to 941s that were already filed. And if so, to what extent, so that you don't run afoul of what you've already used to claim forgiveness for your PPP loan. Did that answer your question?
Yeah, although I could swear that I read somewhere that whatever you calculated, even by looking retroactively at 2020, you would apply for going forward. But I go back and look at that again.
Yeah,
I guess the other question that
if you find something different, please do let me know, because from what I'm remembering looking at, they were talking about, the amount of time that you have to go back. I think you can amend a 941 for up to 3 years. And so that's where I was picking up on what I was saying.
Okay. And then just again, as a strategy issue, if you're looking back to not double dip on the PPP costs, you probably want to take a good look at that 8-week versus 24-week choice that you get to make. We got our PPP forgiveness based on an 8-week calculation. So I'm looking at this calculation for the ERC is taking place before I'm in my PPP window, and then after it, before our partial shutdown or suspension was over. But I think it's better than the 24-week, where you might find you would not qualify for as much ERC then.
Right. And the thing to remember within all of this, we have a lot of flexibility because it doesn't have to be 8 or 24. You can use any period of time within that range. You could use a 10-week period. You could use a 12-week period. You just have to define the period that you're using and make sure that you've got, all of your records, tying into that period that you're claiming so that it can be clearly differentiated from what you're using to claim the ERC.
So basically you want to use the shortest period you could for the PPP,
get your forgiveness.
So you could maximize your ERC with all the other costs.
Right. Exactly. Remembering that, again, one of the provisions of the PPP forgiveness is that at least 60% of that amount has to be payroll costs.
Right.
So we have the other costs that are allowable, but I know there were a lot of us that were saying, well, shoot, we could claim, we can get our forgiveness based on payroll alone. We don't even have to worry about anything else. Well, now it may pay to worry about something else and look at some of those other costs, utilities, the mortgage interest, the other things that you were allowed as non-payroll costs for forgiveness for the PPP, maximize that a little bit more so that now you can maximize your the availability of your payroll for your ERC. So yes, that's why there's you know, a lot of coordination, you know, to be done here. And I would say, as a strategy, obviously the one thing that we want to do first and foremost is make sure that we are not jeopardizing our ability to obtain forgiveness on our PPP loans. So, you know, for those who may still be in that process, that's step one, or will be in that process for your second round loan. That's step one, is to figure out, you know, what do you need to do to, you know, to be able to make sure your payroll, to basically to maximize the non-payroll costs applicable to forgiveness on your PPP for whatever period it takes, so that when you're calculating the payroll costs for the forgiveness for your PPP loan, you're still hitting that 60% mark with the minimum amount of weeks possible. And then gather all your records, make sure you can substantiate that, and then take a look at what is left over or what is upcoming that you would have available to claim the against which to claim the ERC. And so it's really kind of a two-step process for 2 years, right? So almost a 4-step process. For 2020, you do that, and then for 2021, you do the same thing. John Brewer, you had your hand up?
Yeah, I'm sorry to keep jumping in like this. To clarify, when you said you can't use the same wages for the PPP loan forgiveness and the ERC, that also applies to medical insurance, correct?
That's correct. Yeah, you
In
can't
other
use
words,
the same costs.
you can't double dip anything.
Exactly. Yeah. Thanks for the
it-
clarification.
Second question, if I may, we were able to qualify using for the PPP loan forgiveness, for the PPP loan with an 8-week covered period.
Mhm.
However, Valley, the bank that we used, was a little bit slow in putting together the website and the various procedural steps to actually apply for forgiveness. And I'm running a little bit close to the 10-month period. I was inclined to extend the covered period by a month or two, simply so that I can send off my paperwork to Valley, because as I understand it, the application date, quote unquote, is not the date on which we send the paperwork to the bank. It's the date on which the bank sends the paperwork to the SBA. If anyone has a different perspective on that, I'd like to hear it. But to buy us a little bit of time, or to buy Valley a little bit of time, I was thinking of extending our covered period by a month or two, merely to create time for the paperwork to flow on the PPP forgiveness, not to increase, not to capture more salary income, for example.
Right.
If I extend the covered period for that reason only, does that mean that I have given up the ability to apply for ERC on wages and or on taxes and medical insurance during that extended period? Or because I didn't use it for PPP purposes, I could still use it for ERC?
You could still use it for ERC.
So
because again, you're extending your period, but the determining factor here is how much, you know, what are the exact costs that you're using to substantiate. So if you're only using, you know, a certain amount of payroll cost, even within that extended period, then, you know, it's the payroll costs and the health insurance costs that you're actually using.
So the extending the covered period for this administrative purpose has no opportunity cost.
No, not for you. The other thing to
Excellent.
remember also about 2020 is that, you know, do remember that the credit is much more limited in 2020. You were limited to the first $10,000
Right.
worth of wages and healthcare coverage costs per year, per employee.
Yeah,
So
well,
chances are that even if you're at a longer payroll, even if you're at a longer covered period and you did need all of that covered period to get to your payroll, you're still going to max out on the $10,000 per employee.
right.
Part-time employees.
A final technical question. Our rector got married last year, very happily, and shortly thereafter added her spouse to her medical insurance coverage with the predictable impact on our insurance premium.
Mm-hmm.
Spousal coverage is eligible for inclusion in the ERC.
Yes.
Shazbot. What manna from
happy day.
manna from heaven, I think.
Yeah.
Uh,
Yep.
And a final request, although this may anticipate something later in your program, if anybody has put together a calculation worksheet to illustrate how these numbers are assembled and interact and would be willing to share a copy, I would greatly appreciate it.
Great, thanks. Well, that may be a great segue back to John Patterson, who I think probably has done that already. John?
Just want to check one thing and make sure I understand properly. There was the question about having their rector have the tax withheld so it could be used against the credit.
Right.
That's simply a timing issue. I mean, eventually that's not going to change the calculated credit, correct?
It'll change your ability to apply the credit against. So in other words,
Right.
I mean, I guess.
Right.
Yeah.
It's simply a timing thing, not an overall number. My overall tax credit is going to be the same regardless of which way that's done.
Right. And I guess what I would say there also is by virtue of the fact that this is a refundable credit,
Right.
then, even if you exceed the amount. So, I mean, yeah, you don't necessarily have to have your clergy person do that in order to still be able to, take advantage of the full amount of the credit that you calculate, because whatever you don't use against your payroll taxes that you're paying in, whatever you don't use against those withholding amounts that you're having to pay over is going to be refunded to you anyway. And I should have made that clearer when I said that. Sorry about that.
And my accountant said that's going to be a painfully long process because the IRS is hammered right now and it's a paper form you're going to have to file. So you're going to wait forever to get that money back, but you will get it.
Yep. Yeah. Yeah. It may not be quick, but it'll be there.
I've done the calculation, but it's not quite as simple as a spreadsheet yet. Be willing to share what I got, but it doesn't do all the interactions between PPP and ERC.
Yeah, and I mean, I'm going to be doing the same thing, coming up pretty quickly for all of our, as soon as I get done teaching, I'm going to start doing and actually, run through just the final calculations on this for all our diocesan employees too. So, and I will be happy to share, the process that I go through in order to just kind of show how these things play off of each other. So I would say maybe hopefully by the next 2-week session, maybe I can aim for that and say that we could try to, actually come up with some real concrete examples that we could share.
Phyllis, I'll send you the 2021 spreadsheet. I'm sorry, the 2020 spreadsheet I set up. And if you think it's worth sharing, I'm more than willing to let you do that.
Great. I would appreciate that. And then, anybody else who's doing them as well for any of your churches, if you would be so kind as to share them with me, because I'm sure they're going to look different, for different congregations. And it might be helpful for all of us to have a variety of things to look at just to see which one best fits our situations and talk about that. So, I mean, I think that would actually be an excellent way to spend our next financial, our next set of these workshops is, kind of sharing with each other these calculations and bringing questions. So if you actually then are going through this and you're coming up with questions about yours, then we can actually just share with each other and hopefully answer questions for folks. I think that would be great. All righty.
So just to clarify, this is Colleen with St. Stephen's. I think it was John that mentioned about, again, to revisit the, if the rector or vicar had their amount withheld for their SECA portion, would or it would not be beneficial, or it doesn't really matter.
I get it doesn't really matter. I think is what we're really coming up with. And I'm sorry if I confused that issue when I was answering Kirk's question before. because I wasn't really thinking all the way through to the fact that it's a refundable credit. If it was not a refundable credit, it would definitely be much more beneficial for the clergy person to have their federal income tax withheld so that you would get more of a benefit. And, you know, as John Patterson was saying before, the main difference, you know, is just that if they were having their federal income tax withholding taken, you would get it quicker. You know, there is still that benefit to it moving forward. So, because what you can do with this credit is you can apply it towards your federal tax deposits. So for 2021, if that clergy person, and I think this may have been the heart of Kirk's question, moving forward or forward looking in 2021, if your clergy person all of a sudden started having income tax withheld, then you would immediately be able to realize a benefit by applying the tax against, or applying the credit against your federal tax deposit. So you wouldn't have to make that federal tax deposit.
Okay.
You know, so there is somewhat of a benefit there in the timing of it. Eventually, you're going to get it all back either way.
Okay. I just wanted to clarify, make sure. Thank you.
Okie doke. Yeah, and I appreciate us going through that because I know I could see how it was confusing with the way I said it the first time around. So I'm glad for the questions. Thank you. So just a note here, you know, again, with the PPP, we're always, you know, worrying about our deadlines. The ERC, we're a little bit more relaxed because this is really on us. I mean, it's up to us to determine our timing of when we're claiming it and what we're claiming. And as I mentioned before, the ERC can be claimed up to 3 years from the date in which your quarterly payroll tax return was filed. So that's my understanding. So if anybody else has a different understanding, you know, as you're reading through again, that's part of the reason these workshops are so valuable, is because especially with complex things like this, we get, you know, lots of sets of eyes to keep ourselves accountable. And then this one, this provision here was, I think, really mainly based for employers experiencing real hardship. And I don't even know how effective this is being at the current moment. There was a provision added that said that small eligible employers can request advance payments of the credit, subject to some limits, by filing Form 7200 for advance payment of the employer credits after they first reduced their employment tax deposit. So if you got to the point where you claimed the credit and you reduced your tax deposit and you still were in such a place of hardship that you needed an advance payment, you could file this form for an advance payment. I don't even know how quickly it's going through at this point in time, if it's even worthwhile. But I think for most of us, you know, we're understanding that we'll be waiting for, for the money to come through if we are not using it to reduce our employment tax deposits first. So again, you know, we've already kind of jumped this part of the agenda a little bit by talking about coordination with the PPP, you know, that starting from the place where originally you couldn't do both, now you can. So now this has become meaningful to us, the ERC, whereas it was not meaningful to us before. And here again, we have the date that I mentioned, made the ability to claim the ERC and receive PPP loans retroactive to March 12th of last year. And so effectively what that means is that the last 3 quarters of 2020 are open to us for consideration when we're doing these calculations. And here's the part that, you know, we just kind of went into in a little bit of detail. Wages, and I should put in here, I'll try to update this, wages and healthcare costs used to claim the ERC cannot also be counted as payroll costs for purposes of determining the amount of PPP loan forgiveness. And so we need to do the planning that we talked about to generate the maximum benefits for both. This was another interesting provision. Smaller eligible organizations may claim a credit for for all wages paid to employees. And the Relief Act increased the threshold used to determine, to differentiate basically between a large employer and a small employer. It increased from 100 employees to 500 employees. And so the difference there is that for the larger employees, you could only count for the credit wages that were paid to employees who could not continue in their positions. So if you were a large employer with more than 500 employees and you were going after this credit, if you had, wages, if you had employees who were not able to continue in their positions, but you were continuing to pay them, then that was the limitation that they used for the wages that could be counted again for computation of the credit. But we don't have to worry about any of that because we are under 100 employees. And so all wages paid to our employees count for purposes of the credit, other than the ones that we're using for PPP forgiveness. And then again, as we noted, qualified healthcare expenses count as wages. So this is just a table kind of summarizing the changes in the PPP. Under the prior law that was enacted last year, no ERC if if you're going for your PPP loan to be forgiven. The maximum creditable wages per employee was $10,000 per year. The credit was 50% of those wages, up to, again, $5,000 per employee, or 50% of 10,000. And the threshold to be considered a large employer was if you had more than 100 people. And then, comes along the new law applicable to the 2020 period from March 13th onward. So now we're in new law, but retroactive in 2020. That if you receive PPP loan forgiveness, you can claim the ERC, but you can't double dip. For 2020, the maximum creditable wages per employee is still $10,000 per year. For 2020, the credit is still 50% of those eligible wages, or up to $5,000 per employee. And it's still, a large employer is still anyone with more than 100 employees. For, under the new law, but now in 2021, again, same provision about no double dipping with the PPP loan, but now the maximum creditable wages per employee is $10,000 per quarter. So $40,000 per year. And the credit went up from 50% of eligible wages to 70% of eligible wages. So 70% at $40,000 per year would mean that per employee, you would max out at $28,000 of credit per employee per year. And a large employer is now someone who has more than 500 employees. So that's a kind of a succinct summary of the changes in the provisions around the ERC. So this is basically kind of my digest of, sort of the strategy and the steps that we need to take. And as I mentioned before, we're starting with your PPP forgiveness and making sure that you really clearly understand your options as far as your covered period and how they impact your forgiveness application deadline. And that's first and foremost. We don't want to do anything that's going to jeopardize our ability to get forgiveness on our PPP loans. And so technically, the SBA says that if borrowers do not apply for forgiveness within 10 months after the last day of the covered period, then PPP loan payments are no longer deferred and borrowers will begin making loan payments to their PPP lenders. So what that means in essence is that what you were hoping was a grant has now become a loan. If you do not apply for forgiveness within 10 months after the last day of your covered period. And And we can, as I'm glad that, we will look deeper into what does that mean? Apply to whom? Apply to the bank or apply to the SBA? Because I would agree that we would want to make sure that we allow plenty of time to get your application into the bank so that it gets to the SBA if that is in fact the case. So I will be seeking clarification on that one. That's a very important distinction. But remembering at the same time that we're still in this place where we have a lot of flexibility around our covered period, as John mentioned before. So just to give an example, if the date of the deposit of your PPP loan was May 4th of 2020, the end of an 8-week period would be June 28th of 2020. Which would mean that the application deadline would be April 28th of 2021, 10 months after that. The end of a 24-week covered period starting on May 4th of 2020 would be October 18th of 2020, meaning that the application deadline would be 10 months from that date or August 28th of 2021. So in this example, the borrower could choose any period of time within that range as the covered period. You could choose, any date between June 28th and October 18th, as the end of your covered period, and with a corresponding application deadline. So that basically means that the application period for this particular example would be somewhere between April 28th and August 28th of 2021, depending upon what you wanted for your covered period. So, I would even say now that in this particular example, you wouldn't want to use an 8-week period because, that application deadline's coming up in 2 days. And so even, that would be just cutting it a little bit too close, So you would already not be looking at an 8-week covered period. You'd be looking at maybe a 10 or 12-week covered period if you had enough of your payroll costs, to get within that period to get to your forgiveness. So this is step one in your strategy, is going through this particular calculation to figure out with your PPP loan, nail down what that means to you and what costs you need in order to get to your forgiveness. And, as I noted here, if possible, you can hold off on your forgiveness application until you do this analysis and comparison with the ERC to get the maximum benefit from both. And as we discussed before, just because you extend your covered period doesn't mean that you're losing a corresponding amount of payroll costs. You're only losing, so to speak, the amount of payroll costs that you actually have to use to get to your forgiveness amount. So you could say that your covered period is 15 weeks, but still only use 8 weeks worth of payroll if that's all you need to get to your 60%. So, so if you extend your covered period, then you extend your application deadline. So then number 3, calculate your, once you know what your PPP numbers are, then you can go ahead and take a look at what now do you have left as qualified wages, including healthcare costs for the ERC. And then again, making that 3 and 4 are kind of, interchangeable. So you're just, those are the comparisons that you're doing. You can also calculate and maximize the non-payroll costs that are applicable to your PPP forgiveness, again, so that you are maximizing the amount of payroll costs you have available for the ERC, but still making sure that you have at least 60% of your forgiveness costs as payroll costs, including healthcare. And so, as I just said, to the extent that your payroll costs and or healthcare expenses are not used in any calendar quarter for PPP forgiveness, use them to calculate the ERC. And that qualification there, in any calendar quarter, is an important qualification because chances are your your PPP forgiveness, your covered period is not going to match a calendar quarter. You're going to have a beginning that wasn't, or an end of a calendar quarter that was not covered by your covered period. So in that particular calendar quarter, you may have some payroll costs and healthcare expenses that are available for the ERC. Either before or after, as the case may be, your covered period for the PPP forgiveness started. And the ERC is on a quarterly basis. So for example, if you are going back into the second quarter of 2020, and you're, in my example that I gave before, I didn't even get my loan until May 4th. So I already had a part of April and the beginning part of May that would not have been part of my covered period. I could go back and I could, claim, I could amend my 941 form for the second quarter of 2020 to claim that small portion that happened before my covered period ever even started. So that's why that phrase "in any calendar quarter" is meaningful. And then implement the ERC by retroactively amending 941 forms for any prior quarter in which you qualify, and using credit on 941 forms for future quarters in which you do qualify. And so that's one of the other things that you can do with the credit is for any particular calendar quarter, if you have more credit than you have, taxes that you paid in, you can just push that credit forward into succeeding calendar quarters until you finally go after the refund. So that's another strategy that you can use. And then obviously you've got to coordinate and consult with your payroll company once you've done the calculations, to work with them on actually implementing what you need, the forms that need to be filed in order for you to get your refund. And in answer to your question, Kathy, yes, this slide deck actually already is posted in the finance info section of the COVID-19 part of the website from the presentations that I did 2 weeks ago. It's the same slide deck. So all of these steps are here, as well as my sources and resources that I used. All of these that are here, you'll see on the slide deck, they're all links. They will take you right to the sources themselves. Notice 2021-20, as I mentioned, has more of the examples, the frequently asked questions, more of the examples of what it means to be partially suspended. That's informative. And there's just, in some of these other sources here, there's some other explanatory material that you may find helpful. And if that's the case, then please feel free to go ahead and track those down. Any other questions, or have I now confused you? Oh, I haven't confused you completely. John still has a question.
A detailed question. I assume that everything in terms of wages is when paid, not when incurred, i.e. in the first quarter, we had a payroll March 16th, which covered the first half of March, but it's after the 12th, so I get to claim it, correct?
Well, yeah, again, I think that you have to, again, take a look at how that's coordinating with the PPP, because
So we didn't have our PPP until much later than that.
Okay, because PPP was both, remember when they did
Yeah.
that? They said paid and incurred.
Right. But in this case, I'm taking date paid as
correct.
my touchstone.
Yes.
Okay.
Yeah. Mm-hmm. Kirk?
I was just wondering if anybody would weigh in at all on these partial suspension issues. I've been questioning whether or not we've been partially suspended if we've been able to hold outdoor services as well as all of the online stuff that we're doing. Is the fact that we are choosing not to hold an indoor service constitute a partial suspension? I have looked at this and talked to a few different folks about it. Again, as Phyllis indicated early on, this is a gray area, but I was wondering if anybody else had sort of tackled this issue from that perspective yet.
Are you doing the same number of services, Kurt? Or did you go down like from an 8 and a 10 to just a 10 o'clock?
We went to just the 10 o'clock service outdoors.
We did the same thing. And so I've considered that a partial suspension because I've gone down 50% on services, even though, and it was outside. Yeah. I mean, leaving the outside out of the question, that's a partial suspension, the way I've defined it for our church.
How do you feel about the question of everybody who wants to come is coming, whether you had one service or two? No one's being turned away.
I can prove people were not coming to 10 o'clock virtually that were coming to my 8 o'clock in-person service.
Okay, great, thanks.
And John, I see, John, you have your hand up, John Brewer.
A similar question about partial suspension. If the services were shifted entirely to online, I assume that qualifies completely. Once we reopened, which we did briefly in August, September, and then more recently, but with a capacity limit, does that capacity limit constitute a partial suspension?
I would answer that question, yes.
Okay, so Kirk's question earlier about moving to outdoor services, the only way that would be interpreted as a partial suspension, or one way, is that if there were capacity limits on the outdoor service, and I'm guessing there probably weren't.
Well, again, I think, for me, I tend to go back to the governmental order that originated everything that we're doing right now, right? Because the only reason we're even thinking about moving things outside is because we have a governmental order that restricts basically what we can do. And to me, that's what I go back to, just the fact that we have it open and available, doesn't mean that it's not restrictive, because we've got lots of folks who don't want to come to outdoor services. So.
Well, and Gregory makes an interesting point in the comments in the chat about suspension of passing the collection plate.
Yes.
If there was any activity designed to reduce or having the effect of reducing your income, it would be stopping the collection plate.
Yeah, and obviously in that case too, we've tried to make a whole bunch of other options available for people to be able to, like online, or drop it in the mail or whatever, but that doesn't necessarily mean that it's not restrictive, and that it doesn't mean that it has not had an impact on us. It has.
Yeah. Yep.
Yeah. So, Meredith, yes.
I want to circle back to the first PPP loan. What do you do if your bank's not giving open to taking forgiveness applications? It's really not much you can do. For example, we got the money on May 15th, so it's a little bit different than the scenario. But every time that you put that slide up, I feel like I'm coming towards the deadline, and I can't find anybody to tell me. First of all, I forwarded you the email with the discrepancies that they said that they found.
Mm-hmm.
Which we were like, how do you find discrepancies and deposit the money?
Mm-hmm.
So I'm concerned that we're not going to be forgiven. Any advice?
Well, I think in your particular situation, probably it's best that maybe we just pick a time that that you and I can go into it in a little bit more detail. Let's just set up our own Zoom meeting or something, and we'll walk through it and figure out.
Thanks a lot.
Yeah, no problem. I saw that Greg also just posted that PNC hasn't opened the forgiveness application either.
That's my bank.
Yeah, and so
Phyllis, this is Lou Cavalieri. We are also having the same problem with PNC.
Yeah, and
I've been on the phone with them several times, and they still say, well, you'll have to wait for the portal to open up, and that's it. So PNC for some reason has issues with this, whereas I have another foundation that I work for that uses WSFS, and we've already been forgiven there.
Yeah, and I know from some of our prior meetings that we've had on Mondays as well that there are a number of other folks who've also already been through and had their forgiveness application. Oh, Michael Parent, same thing with him. So PNC is clearly a problem. Yeah, so there really isn't anything that we can do about that right now, except to understand again that, you know, as with the example that I put up there, you know, that the 24-week covered period deadline was August, end of August. So for you guys, you'd be into the middle of September. So we do still have some time, all by way of saying, don't panic. But I do appreciate the fact that you're anxious about it, because you should be, and keeping it in mind, so that we can get it taken care of as soon as possible. I mean, here's where I get in trouble. Common sense would tell me that if it's the bank's problem, that, you know, the borrower should not be held responsible for that. And, you know, but that's common sense. And so we kind of, you know, we don't want to have to rely on that, but we do still have some time. And hopefully within the next month or so, they'll, you know, get their act together so that you could do that. And again, remembering that just because you choose a 24-week period, so you stay within the guidelines, doesn't mean that you have to use all of the payroll from that period to substantiate your loan, or your forgiveness. All you need to do is substantiate, you know, whatever you need to get to your 60% and make sure you have full forgiveness of your loan. Any other questions? Great. Well, these were some fantastic questions. Thanks for, you know, your engagement and participation today. I am going to make sure that we post this recording on the website, as well as the recording. I think the recording that's up there now is from 2 weeks ago's session, because I just thought your questions were excellent. So we can have them up there, and you'll have a chance to go back through and take a look at things too, should you want to. Again, I would love it to see as many of you as possible 2 weeks from today, because I want to go over some of these real specific examples and share with each other the questions and comments and experiences that we're having. So please do mark that on your calendars. It's always the same Zoom link. The Zoom link doesn't change. So would love to see you back here in a couple of weeks. John Brewer, you have one more question?
Yes, I'm sorry. It may have been addressed somewhere else, but if so, I missed it. Applying for ERC, are we applying through the banks that serviced our PPP loans, or do we apply directly to the IRS?
Directly to the IRS.
Well, I suppose.
Well, and again, you know, with the ERC, for what you're doing proactively in 2021, you're just not making your federal tax deposits to the extent that you have credit to offset it. So you get it immediately.
Right.
So, you know, that's basically it. But you do have to go back and amend your 941s to get what's already happened caught up. But, you know, moving forward, you could start on that right now.
Well, and then we've got to but we have to wait until we have an approval from the IRS, correct? Before we instruct our payroll processor to stop withholding. No,
you calculate your credit. And, you know, I mean, could the IRS come back and question or audit you at a later date? Sure, they could. But this is not an application process. This is you calculating your credit and telling your payroll company what you need to have done to access it.
So listen,
I see.
When you do the quarterly 941s, you got to report, you calculate it there. So it becomes a credit on the 941.
Right.
You still got to calculate the payments.
Right.
Right. But you can still, when you calculate your credit, you can
apply it directly to that quarter.
You can apply it directly to your federal tax deposits that you make.
Yeah. And that makes your internal accounting all the more complicated too.
Right.
Yeah, great.
It does improve your cash flow though. So again, your choice. Yeah. You do it, you know, you do it whichever way you want. Some folks probably will prefer to just, you know, take it 941 by 941 quarter by quarter, you know, and see how it goes rather than messing around with payroll tax deposits.
I would suggest in 2020, you just file the 4 amended 941s, carry it forward in 3 of them and take it on the last one.
Yeah, well, that was what made the most sense to me too. You know, that way you're not trying to apply, you know, for 2020, it's actually technically only 3 because you only have from March 12th forward.
Yeah, but
So
you've got that first, like I said.
you
I had a
do.
payroll on
You
March
certainly do.
16th.
So you could do that, and then instead of trying to get them to process 4 separate checks, they're only processing 1.
Yeah.
Yeah. So, and that makes a lot of sense. You've got options. All righty, great. Well, thanks again. I will look forward to seeing as many of you as possible in 2 weeks. And right now I'm going to go see what kind of damage my puppy did while we were talking. So,
Phyllis,
yeah.
Quiet it down.
Yeah.
hey, Phyllis,
I
had sent you an email. Can we chat real quick just at the end of this?
Sure. Yeah.
Okay.
Let me just, if you give me just a second to go out and
Sure.
check, I will be right
Absolutely.
back.
Okay.
Thanks, everybody else. Take care.
Thank you.